the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements right here on the local bourse. Well, Singapore shares moved lower today as investors looked ahead to a week of corporate earnings. So the Straits Times Index was down 0.25% at 4,250 points at about 2:46 p.m. Singapore time, and that is with a value turnover of 898 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI ended further in the red, down 0.47% at 4,241 points. In terms of value turnover, we're looking at 1.43 billion Sing dollars. Gainers outnumbered losers, though, 290 versus 276. Top advances for today, we've got for you iFAST, Hallpa and Asus. And top decliners, we've got here GMHUSD, DBS and UOB. Well, in terms of companies to watch, we have Singapore Airlines because its chairman, Peter Seah, was redesignated as a non-independent director at the company's AGM on Friday. Now, elsewhere, from a trade deal reached between the EU and the US to how Chinese AI firms are forming alliance in a bid to develop a domestic ecosystem and to reduce dependence on foreign technological know-how. We've got more international headlines in focus, plus expectations ahead of big tech earnings out this week from Amazon, Apple, Meta and Microsoft. Well, lots to watch, and joining me on a Monday is David Kuo, co-founder of The Smart Investor. Mr. Kuo, welcome back on a Monday.
Thank you so much, Tian. Big week for all of us.
Big week. So many things going on. Fed decision, Max 7 earnings, and also the PCE and jobs report. But let's start with the US this time round on the trade front. The EU and the US hammered out what's said to be the quote-unquote biggest ever deal to avert a potentially damaging trade war. So Trump and EU's von der Leyen announced at his golf resort in Scotland that a baseline tariff of 15% that will be levied on EU exports to the US. Now, Brussels also agreed to make $600 billion USD in additional investments. How far was this within your expectations? How have global investors reacted thus far?
Okay, I think it was a little underwhelming here. On the one hand, what we actually had was some kind of certainty. So a baseline tariff of 15%. But it excluded a whole bunch of stuff. So the most important stuff that it excluded was pharmaceuticals and wines. And so therefore, we still don't know what those tariffs are going to be as far as the export of European pharmaceuticals and spirits and wines to America will be. Cars, so that's going to face a tariff of 15%. But I think in general, when you have a look at many of the luxury brands of cars produced in Europe, the likes of BMW, Mercedes, Porsche. I mean, those kind of cars. I mean, if people in America want to buy fancy European cars and pay 15% more, they can afford to. But I think it's going to be, in general, things like wine. I'm not a drinker, so therefore it won't affect me in any way, except when I do some cooking. But as far as the Americans are concerned, I mean, their access to French wines, Italian wines, maybe even Portuguese wines, that we still don't know what is going to happen there. And, of course, the pharmaceuticals, that's another big one. But 15%, the way I break it down is this. I think the European exporters will absorb some of that. The importers in America will absorb some of that. And, of course, the consumers will absorb some of those tariffs. So maybe the European exporters might trim their prices by 3-4%. But the bulk of that will be borne by the importers, by the supermarkets, by the retailers, and it depends whether or not they are going to pass on that to households. If they don't, then it's going to be the households that will pay the bulk of that. So is it a good deal? It is a good deal in the sense that at least we have some kind of certainty, some numbers that we can work with. But is it a good deal in general? I would say probably not for the Europeans and definitely not for the Americans either.
And Mr. Kuo, if we could go back to the Singapore stock market as usual, how did the SDF fare today in relation to movements in Asia, which was largely positive? Any surprises when it comes down to the biggest movers?
Well, the first thing really is we've had 14 consecutive sessions of gains here in Singapore.
Yep.
So it is not really surprising that some people may want to take some profits if they have got some profits, and then they're going to wait until maybe the end of the week just to find out how things are faring with regards to the American economic numbers, with regards to things like interest rates in America and other parts of the world, and also with regards to tariffs. I mean, we have some certainty with Europe at the moment, but we still haven't got any great deal of certainty with regards to the China tariffs. So, so I think in general people are just sort of saying, I've made some money, so therefore let's take some money off the table at the moment. We'll sit on our hands, and if things look good, then the earnings are good in America, then we'll go back in. But for me, Tian Tian, I'm a long-term investor, and I ignore all of this stuff. And if the market falls, then I'll be there to go and buy some more.
Okay, and Mr. Kuo, I do want to zoom in on some of the counters to watch for today, and in particular AEM, which is a semiconductor test solutions provider. I mean, shares of AEM was down 4.7% early on after it announced the resignation of its CEO. How far does this come as a surprise?
A huge surprise for me, Tian Tian, because I didn't see this coming. I mean, when I looked at the AEM results when they came out, I thought, well, the results look okay. Profits are up, sales were down a little, but nothing really a great deal to worry about. But clearly the board of directors have decided that they want to change of direction, they want to change the CEO, and this current CEO, the one that's been in the job, has only been there for about a year or so. So she has hardly had a chance to get her feet under the table before she's been, for want of a better word, ousted. And I don't see any rationale behind that. I thought the company was doing okay. But clearly they want maybe faster growth, and they think that the new CEO coming in is going to be able to provide them with that faster growth through a new strategic direction for the business. So, I mean, these things happen in business, and there's nothing we can do about it.
Now, zooming in on some of the other counters to watch, some news out of SIA today. Its chairman, Peter Seah, was redesignated as a non-independent director at SIA's annual general meeting on Friday. Now, additionally, SIA Group posted a record full-year net profit of 2.8 billion Sing dollars for FY 2025. Now, in totality, how would you read into the news? What do they mean for investors?
I have an old saying, which is, if it isn't broke, why fix it? And I think as far as SIA is concerned, it isn't broken. Things are doing okay at SIA. So therefore, why not redesignate the director and chairman, Peter Seah? I mean, he's doing a good job. The CEO's doing a good job. The company's doing fine. They may face some headwinds, but I would sooner have somebody with experience facing these headwinds, because there is going to be headwinds. First of all, consumers are feeling a little bit strained at the moment, so therefore it is going to be very difficult for people to afford travel in the future. And there is going to be headwinds with regards to other airlines. They're going to be cutting prices. And I think if I was a shareholder, I would definitely want somebody who has a lot of experience in order to guide this company through the turbulent times.
So are you surprised by the move, though?
No, definitely not. No, I think he definitely is a good guy, and he definitely should be there. Redesignate him for sure. Yeah.
Okay, now if you're just tuning in, we're in conversation with David Kuo, co-founder of The Smart Investor. Well, across the region, Mr. Kuo, let's turn our attention to China. Its AI companies have announced 2 new industry alliances aiming to develop this domestic ecosystem to reduce dependence on foreign tech. This, of course, as AI firms in China seek to cope with U.S. export restrictions on advanced NVIDIA chipsets. Any thoughts on the latest move, given how officials in both China and the U.S. they are set to go for another round of trade talks very soon?
The way I look at it is that the AI sector is going to be heavily bifurcated. I know Jensen Huang came out last week and talked about the importance of China in the AI space, and he was also talking about how developed they have become, and maybe China will become a threat one of these days. not just yet, because America still has NVIDIA, they still have Jensen Huang, and they still have some of the probably the best AI companies around. But their days are numbered because China is catching up very quickly. What it seems to be happening now is that this entire sector is becoming bifurcated. You have America and its allies, and you have China and the people that it wants to get on board the Chinese AI stuff. I mean, I don't know if you remember in the old days, we used to have mobile phones, and there was two competing systems.
Android
and... no, not just Android. It was the chips themselves. And if you actually went from Europe and you went into America, you had to change your SIM because the SIM card just didn't work over in America. And I hope we don't end up with a system now, where we have two completely competing AI systems, one on the east and one on the west. And I think China wants to get on board some of the people, particularly in the south, some of the more developed economies, and say, I want to help you with AI. I want to help you bring forward your AI development. And we're going to end up with two completely different systems. And I have to say, I recently tried out some artificial intelligence queries, and I tried some of the Chinese ones. I tried some of the American ones. It came up with completely different answers, Tian Tian. It was really quite worrying.
Yeah. Question though, Mr. Kuo, what will the ramifications of such bifurcation be for investors, for markets, or is it still too early to tell? I
think investors will have to choose. I mean, they will have to say, do they bet on the American system, or are they going to bet on the Chinese system? I mean, I was reading today that NVIDIA was not present at the big symposium, at the big conference exhibition over in China at the moment. And I kind of wonder, why was NVIDIA not present there, given that Jensen Huang was there the week beforehand talking about Chinese technology? Why was he not at this exhibition exhibiting his product? Is he not going to be able to sell his product into China? Whereas a company like Huawei has got this huge stand over in the exhibition trying to promote its chips. So are we going to see this sort of competing technology between the China-made AI chips and the American AI chips? And if that were the case, then going back to your question, investors will have to make a choice and say, am I going to back the American system, or am I going to back Huawei, Xiaomi, Alibaba, that particular system? And it's going to be very difficult. I wish they would just sit together, knock their heads together, and come up with a plan that would be beneficial for all of us, rather than have us choose one or the other.
Now, speaking of trade talks or deals, Mr. Kuo, we must also look at the U.S.-Japan trade deal, because Japan's top chief negotiator, Ryosei Akazawa, expects only 1 to 2% of that recently agreed upon a $550 billion U.S. fund to be in the form of actual investment. A bulk of that will be loans. So do you think the trade deals are as beneficial to the U.S. as Trump had touted them to be, and how should investors be reading into the news then? I
think it was a case of saving face on both sides. I think America understands that it can't do without Japan, and Japan can't do without America. So therefore, they came up with this plan. In general, 15% tariffs looks kind of okay, particularly for the Japanese car industry. But as far as this investment is concerned, look, if I lend you $10, I'm not investing $10 in you, am I? Yeah, I'm just lending you $10, on which I expect my money back at some point in time, in full, preferably. Yeah, so I think this was really smoke and mirrors, and it was really a face-saving exercise for both sides. But Japan needs to be very, very careful. Sure, it's exporting its cars to America with a 15% tariff, but, there's a much bigger car manufacturer out there at the moment, and Japan needs to be very careful. It needs to develop its cars, because otherwise China is going to eat its dinner, it's going to eat its lunch and eat its breakfast at the same time if it's not careful.
And finally, Mr. Kuo, we can take some time with this question. We've got a Fed rate decision. We've got a self-imposed U.S. tariff deadline due this week, not to mention earnings out of Apple, Amazon, Meta, and Microsoft. What are you expecting this time around?
This is why the Singapore market was down today.
Too many things going on.
because there's so many things happening at the same time. Fed decision. I think in general, people are saying that, yes, it is unlikely that the Fed will cut interest rates this time around. But what will be interesting will be when the minutes come out and we hear who are the people who dissented on the FOMC with regard to the interest rates. We know that there are two of them who would ideally like to cut interest rates. Maybe they are vying for the job of chairman of the of the Federal Reserve, and maybe they're the ones that are saying that we should be cutting interest rates now. But if you read the economic numbers, there's a case to be made on both sides. You can either cut or you can leave them where they are, or there might be a case for raising interest rates. But I don't think anybody would dare raise interest rates at the moment until we see the data. And this is where the PCE data comes in. What is the inflation numbers going to be like in America? Are those tariffs beginning to filter through the system and beginning to push up prices of goods for Americans? In which case, I think even a September rate cut could be off the table. And even those two who are likely to dissent may turn around and say, yeah, I don't think we should be cutting interest rates just yet because there is still inflation in the system. And then down to those four big companies, probably the four largest companies in the world right now, tech companies rather. We have Microsoft, we have Meta, we have Amazon, and we have Apple. Yeah, and it spells mama, by the way. And I hope they all don't start screaming mama, mama at the end of it because people will be watching these numbers very, very closely. In the case of Microsoft, is it justified that it's going to be putting so much money into artificial intelligence? Because investors will say, are we getting a return for this? In the case of Amazon, they'll be watching tariffs very closely because if a deal is not done between America and China, it could cripple its business very badly, particularly when it brings in goods from China into the U.S., and how is it going to be able to pass on those tariffs to consumers? In the case of Meta, it's all about advertising. Is the advertising revenues doing well? And will it have to pump more money into AI? It already is pumping a lot of money into artificial intelligence. And again, shareholders will be saying, are we getting a return for this? In the case of Apple, they're not pumping enough money into AI at the moment. And how is it going to be able to compete if it doesn't do so? So, four big tech companies, and I think four different areas that people will be looking at. And two of them interest me most because I have shares in Apple and Microsoft.
All right, lots to watch indeed. And thanks so much for the insights, Mr. Kuo. That was David Kuo, co-founder of The Smart Investor.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.